Yeah. And we're live. Can you hear me?
I can hear you.
Cool. Hey guys, what's going on? It's Matt Merenoff. Got my co-host Lee Perlman. Sorry, it's actually Lee M. Perlman, Esquire. And tonight we are talking about foreclosures. What's coming up? The latest and the greatest. What's going to be going on between 2021 and 2022? So we're going to get right back into it right after this. What's going on, everybody? Thank you so much for tuning in tonight. Lee and I basically bumped our guests so we could actually do this live because, there's a lot of shutterbustle going on right now in the weeds per se with foreclosures, and I think people are really worried about what's going to happen. So we want to talk a little bit about tonight what's going on with the CFPB and the possibilities that could be coming down the line. Lee, what's going on? How's your week so far? It is Wednesday.
Week so far is good. It's been a good week. I appreciate, as always, being invited back on with you. I think tonight we wanted to try to simplify and talk a little bit about what's coming up. As we know, I mean, if we look at what's happening, there are a lot of borrowers right now that are in forbearance, some in foreclosures that have been suspended. You and I have talked about the fact that there might be somewhere between 8 and 10% of borrowers who are either in foreclosure or in an active forbearance. The forbearances are coming to an end, and the Consumer Financial Protection Bureau, which is the government agency, just so everybody knows, that regulates mortgages and credit cards, came out this week with some proposed regulations. And those regs, which are not final, but moving towards the finish line, really take two main approaches. The first approach is they want to create what they call a special forbearance review period that prohibits servicers from starting a foreclosure till December 2021. So that's big. I mean, if that gets finalized, that means that servicers would be limited to beginning a foreclosure till the end of next year. But the servicers are also going to be required. They're going to be required to specifically offer streamlined loss mitigation and loan modification options to borrowers. And they have to be out in front offering these options to borrowers when the forbearance is coming to an end. And that's really the dynamic as to what's going on. Like I said, it's not final, but I think we can read the writing on the wall.
Lee, let's give away some goodies tonight as far as what people should be doing as far as communicating with their banks. Like if somebody's in a forbearance right now, and what if the forbearance has already ended? You're saying that it's possible that the lender has to deal with them until the end of December. But what if that isn't in place? What happened? There's always, the what if, there's that gray area. And then also, what about the people that were not in forbearances, and now they're not even offering forbearances? So now what? There's a two-part right there.
Yeah, I think that obviously it's on a case-by-case basis, but you give a good example. Let's talk about the individual who wasn't in forbearance and may have financial distress now. You want to look at what's going on with them. How far behind are they, if at all, on the mortgage? If the mortgage is an escrowed loan, are they making the payments? If it's non-escrowed, were they not making the payments? But I think you want to reach out to the mortgage company right now, you want to be proactive. We always talk about the difference between being proactive and reactive with the mortgage company. You definitely want to be proactive. I suspect that some of the servicers now are starting to get instructions and directions from higher up that says you better start to offer borrowers some of these loss mitigation options. Like you said, if you're in a situation where the forbearance is starting, is coming to a close, or you're not in a forbearance, you want to see what options are available. And like we've talked about a lot of times before, if something's getting offered to you, make sure it's in writing. Find out how are they dealing with the escrow? How are they dealing with the late payments? How's it going to be reported relative to the CRAs, the credit reporting agencies? You have to get these components nailed down so that you know what's happening, so that you're negotiating the best deal for yourself.
It's funny you talk about, like, if they were behind, maybe if they were in a forbearance, or maybe if they weren't. But I've actually, based on conversations that I've had with credit professionals all over the United States, which I appreciate. I'm dealing with some heavy hitters, and they're saying, look, before I take the person on as a client, if they missed a late, if they went late on a credit card once, or even twice during the pandemic, or even a mortgage payment, or what's it called, a car payment, have them contact the financial institution directly and put it in writing. Say, look at my credit history. I've got amazing credit. But unfortunately, I took a hit, and it was during the COVID period of time. Is it possible? Can you remove the late on my credit report so my credit doesn't take a hit? And we're getting positive results. There was a one guy that I spoke to you about, who was in a forbearance, and he basically said he didn't want to be in the forbearance anymore, and they pulled the forbearance from him, and they hit his credit report 2 times.
Right now, people need to understand that from the first COVID relief bill that was in place, there's not a limitation presently on the number of times you can take a look at your credit reports. So you have access to your credit reports for free, and people should take advantage of that. I mean, you should have annualcreditreport.com, so everybody knows that's the only free credit reporting resource that's available. All the other ones are, paid services from Equifax, Experian, where you have to, they're extra services that you have to pay for. But annualcreditreport.com, free governmental website, pull your credit report. Many times in the forbearance agreements, they're not really permitted to report you as late. So you want to take a look at that. And like Matt said, it could be an opportunity to get out there and dispute it now, because if you're going to be in a situation where you have to apply for credit later, or you're going to get into a full loan mod application, you don't want the credit reporting aspect to hold you up in any manner, right?
I mean, for me, like, based off the experience that I'm having with individuals that were late prior to COVID, they're stressed out, but their stress level has kind of like gone away, because they're like, hey, I basically got an extra free year in my house, and then, you've got the additional new foreclosures that are hitting. And then you've got the people that really were never late before in their mortgage, and now they have, I would say the pandemic, the mortgage pandemic people now that are late. Those people, in my personal opinion, based on what I'm hearing, I believe those people are going to get bailed out. I truly believe it in my heart. They've paid their mortgage for 15, 20, almost 30 years. I mean, I had a guy, he was 15 years left on his mortgage, and they gave him an option to put either in a 30 or a 40-year mortgage. His thought process was, hey, I've got 30, I got 15 years left, going to a 30 or 40. That's great. Spread it out. My payments almost half of what it was in the 15-year payment that he had, based on what he said, or how the numbers worked. So he was like, it's a no brainer, no prepayment penalty. So he's actually able to go in and be able to, um, pay if he wants to pay additional payments. But that was a phone call. That was somebody reaching out to me and saying, "Hey, I don't know what to do." Like, I don't know about you, Lee, but I don't like to just take money from people. If it's something, it's an easy fix. And say, "Hey, try it. If it doesn't work, come back to me, and then we'll revisit on how to do it." So we've been trying to help out as many people as we can during the pandemic.
Yeah, I mean, look, your approach to business is similar to my approach to practice. I think that's why we're able to help clients and do a lot of work. I really do my best to the extent possible not to have a client engage me unless I really feel comfortable, more than 50-60% chance that things are going to work out. To take a fee and not be clear about what you're going to be able to do and what the objective is, um, it's not for me. That's not the way I like to practice. I like a satisfied client, like a happy client. There's nothing better for me that at the end of the day, when I'm having a tough day, to have a client call me, or I have to call a client with a great result, because too often I have to call clients with bad news. So calling with good news is that's satisfying to me.
I got a phone call today from somebody that Leah and I had helped. We actually got brought in on this case in 2018, and at that time, the short sale was taking like forever, like over a year and a half, almost 2 years. We got brought into the mix. I think we actually got it resolved in like 4 months. And really what it came down to was the communication. And there were so many moving parts and nobody was communicating. And that's why it wasn't going anywhere. Well, tonight I got a phone call. I was happy, but I was also sad and mortified. Um, the wife had called me and said, "Hey, do you happen to have a copy of the signed HUD and the releases and the payments of the judgments that were paid out?" And I said, "Yeah." I said, "I'll send an email, to Leah, and we'll get the information that you need. Give me to the end of the day." Well, Leah happened to be, I don't know where she was in her day, but she responded right away. She told me that she's very thankful, and she's like, "It's been a very hard year. My husband and I had split up. Our daughter, 21 years old, died in her sleep."
Oh,
Like, it was like, what? So it's kind of like she's selling her property that she has. Um, she hasn't seen her husband in almost a year. They literally split because of the death of the child. And now they're selling whatever the property is that they have now. I think it's on the shore or something like that. And they're going to be supposedly maybe reconciling or whatever, and getting another property like, in the next couple of months, whatever. But a lot of pain. She said she had to leave New Jersey, go to a completely different state, and just be in a different element. She says there's nothing like the loss of a child. So it was it was good that we had everything, and then we could relieve her of that stress. But then she just dropped a bomb on me, and then she started crying. It's a tough situation, it
yeah,
really is.
the stories that I've been dealing with my clients over the last year, you just really can't make them up. I mean, I have a lot of clients who are RNs, working crazy shifts, and then trying to come home at night, trying to figure out what to do with the mortgage, what to do with the credit cards, what's on pause, what's happening with the student loans. And that's all, at the end of the day, dealing with the stress about whether they have proper PPE, and when who's getting vaccinated. So everybody's level of stress, I mean, it's right here. And then dealing with this financial stuff, it was stressful pre-COVID for many of my clients. So
Yeah.
it's DEFCON 5, for a lot of people. Um,
Lee, hold this thought. We'll be right back after this message.
His energy, you can tell he's real. There's no BS talk.
Listening to Matthew Merenoff for a good amount of time, like a light bulb went off. I was like, wait a minute, I've got to learn more about that short sale process.
We're back. Go ahead, Lee. What were we going to say?
I was going to say that I wanted, if you're okay with it, to touch a little bit on, what's specifically going to happen to somebody who's coming to the end of forbearance, because there are really a couple different situations. There's the individual who's coming to an end of a forbearance, right? Mm-hmm. And then we have the situation for the borrower who's not yet in forbearance. Based on the CFPB rules, as we try to simplify them, and they're a little complex, and we don't know exactly how they're going to, play out. But the main idea is, if you're coming to the end of a forbearance and you haven't applied for a loan modification, the mortgage company has to, if you've been COVID impacted, the mortgage company has to give you a little bit of a safety net and offer you those loss mitigation opportunities.
Lee, hold on a sec. This is actually a really good question. Will these homeowners that are in the forbearance have to show proof of employment to qualify? Also, should the homeowner still sell their home during this new post forbearance? I don't even know. I don't understand that question. But are they going to have to show proof of unemployment?
It's a good question, and I think that they're going to probably have to show some kind of proof of employment. I can't imagine, you're in the loan modification, loss mitigation world just like I am, Matt, and I don't think the mortgage company is going to permit a loan mod to get to the finish line without that proper documentation. Now, the interesting thing that I've been thinking about as I'm trying to process all these CFPB rules is, I have a point of reference with how I have dealt with servicers and mortgage companies, and I have to say, most of the time, it's not great. So this puts the burden on the mortgage companies and their representatives to reach out to borrowers when the forbearance is coming to an end and either tell them their loss mitigation application is incomplete and why it's incomplete, or they're coming to the end of a forbearance and they haven't applied for a loan mod, and give them the specifics on what they need. I have to tell you, and Matt, you and I talked about this the other day, I have to tell you, that's putting a lot of pressure and putting a lot of the onus on the mortgage company to make sure they check all these boxes. I don't know that they're going to be able to successfully do this. And we don't know what the consequence is of the rules if they don't. So how will the mortgage company be held responsible if they're not communicating these options to the borrowers? Don't know.
Let me ask this question, and I got to interrupt because everybody has a different opinion, and I'm talking to these guys in all these different banks because I'm trying to put my ear to the ground because I want to hear what's going on. But I'm getting a difference in opinion on the default because in 2010 there was like 2.5 million people that were in default, but I'm hearing, anywhere between 8 to 10 million. But I keep hearing the 10 million mark, and now people are saying it's creeping over 10 million. What are you hearing about that as far as people being in default right now?
Yeah, I mean, what I've read and what I've heard, and you're right, no one has an exact number, but I've heard somewhere between 8 and 10%, 8 and 10% of all loans right now are in some kind of foreclosure or forbearance status. That's an incredible number. And remember, they're all being held up with the Hoover Dam not lifting because of all the stimulus and safety nets that have been in place in the foreclosure moratoriums. So once that lifts, it potentially lifts in June, which was the stimulus bill, or maybe it's the CFPB and it doesn't lift till December. But it doesn't mean, these rules here don't mean that they can't continue with the foreclosure, but at the same time, they probably can't have a sheriff's sale, and
Right.
they have to still offer you these loss mitigation options.
Right.
I think that the CFPB may have overly simplified this, because when they say they have to contact the borrower with an incomplete loss mitigation application, we handle loan modifications. You deal with them regularly. That's pretty vague.
I know, but Lee, hold on. I'm going to interrupt you again.
Of
And the reason
course.
I'm going to interrupt you is because what's upsetting to me is the government has made it very clear: forbearance, deferment, and then they were not really being 100% with the homeowner when the homeowners were calling in and saying, "Hey, I want to do a deferment," and then people were calling me, "Hey, I got a deferment. Did you get a deferment? Or did you get a forbearance?"
Yeah.
No, they told me to get a deferment. Then they showed me the paperwork. I'm like, "This is a forbearance." So they're like, "But I don't understand." Now the banks are getting fined to the tune of $10,000 a phone call because they're giving improper information out. But that doesn't help the person who's in trouble with their property. So for me, it's kind of like it's very upsetting because Lee, nobody talked about. They still haven't talked about it, probably for good reason because they're kind of scared. The people that had modifications that went through the modification process before, and there's no chance of another modification for them. How is it that something like this with the pandemic that they if they go late again, right on the mortgage, what let's say they did the forbearance. And what if they don't qualify for the quote unquote whatever the program is that may or may not come out that's available for these people? But let's say their payment was $1,800 a month. There's nowhere to put that money. So
Yeah.
now their $1,800 monthly payment might go up to $2,800 a month. And that might be their fix because as long as they're offering them loss mitigation option or something as far as a modification per se during that program, then their hands are clean.
Yeah, I mean, you made a lot of really good points in what you just said. I mean, as an attorney, trying to think this through, just because they give them an option doesn't mean that they have to follow through with it. So, for example, if they're offering them a loss mitigation opportunity or option, and like you say, they previously defaulted and they're not eligible, I'm not so sure that the government can go ahead and require the lender to say, you must give Mr. Smith a loan modification when he otherwise is disqualified before because he didn't meet the requirements. That's not what this says. This
Mhm.
says they have to offer them opportunities and tell them where their loss mitigation application may be incomplete and offer them other options about why it's incomplete for people, like I said, who have incomplete applications or are coming to the end of a forbearance. But it doesn't mandate, and I don't know that the government can mandate that they have to have a forbearance. That's a whole nother discussion probably for another night. But my impression, and different people probably have different opinions, and I haven't studied it carefully. Um, I don't know that. I don't know that can be compelled. So
Lee,
that's an
hold on,
issue.
hold on one sec. We'll be right back at this commercial.
Hi there. I'm Lee Perlman. I'm a consumer bankruptcy attorney. I've been helping people get a financial fresh start since 1994. You can reach me at newjerseybankruptcy.com or 856-751-4224.
Go ahead, Lee. What were you going to say?
So I think that the idea and the premise, as I originally said, is to offer a safety net, offer opportunities. But to return to your earlier point, people don't understand what they were negotiating, and what I've been seeing over the last 12 or 13 months, or some of the same things you've been seeing with the pandemic, is let's take a couple of examples. People got involved in a forbearance, didn't understand that even if it was an escrowed loan, they were required to withhold and make payments to the taxing authority. I have to tell you, 7 out of 10 clients that I talked to who negotiated the forbearance without talking to me, none of them understood that. So they're not making those payments. So this is a problem that's going to go over the cliff very soon in the next 3, 6, 9 months. That's the first issue. Borrowers who do not understand the requirement to make their escrow payments, very significant. Average tax bill in New Jersey, $15,000 to $20,000. People are not making their tax payments. That's a whole problem. We're going to be going on almost a year and a half of escrow payments. So that's gonna lead to a whole other situation, in my opinion. The other issue too is borrowers not understanding what Matt just said before, the difference between a deferral and a forbearance. Many people don't understand what they even agree to. So at the end of the deferral period, if they don't know that those payments are coming due or whether they're going on the back end, 3 out of 5 clients that I asked, A, don't know what they agreed to, and B, don't understand the difference. So those two things coupled with the escrow problem, in my opinion, it's a disaster in the making.
Look, we can only do so much as far as trying to help people and guide people, and that's why I wanted to do this, special tonight, because this is something that came up. People are asking questions about it, obviously with great concern. But I am getting calls from people that, you know, didn't listen to me like along the way. Like people are, and remember, I'm not an attorney, I'm not an accountant. I don't play one on TV either. But it's funny because they're like, what you said made sense, but I guess I didn't want to hear what you were saying as far as when you're in the forbearance, you can make payments. You can make modest payments. You could make $1,000 or $1,500 or whatever it is. That goes a long way after the forbearance would have been up. So I'm talking to a lot of people, and I feel bad for these homeowners that may or may not have gotten really bad advice, because I don't know if they're telling me the truth or not. I spoke with an attorney, told me one thing, and then I spoke with the bank, and some of the stuff doesn't make sense. Nothing that I think would come out of an attorney or somebody who works in the bank.
There are a couple of just real major points I want to make sure I make before the night is over.
Yeah.
And the main thing I want to say, and you're saying it, but I want to emphasize it. Forbearance is not forgiveness, right? I'm going to say it again. Forbearance is not forgiveness, and people confuse the two. The other thing I want people to know is, even if I want clients to know, I want borrowers to know, I want my colleagues, my friends, if you're going to get involved in an outreach with the mortgage company, remember that negotiating a loan modification, it's complicated. Okay, number one, it's a complicated process. Number two, as we talked about tonight, servicers are in the business of making money, not friends. Okay? 3, servicers make mistakes, and servicers violate the law regularly. I see it in my practice. So understand that in certain circumstances, an experienced attorney who understands what a loan modification is, the difference between a deferral, the difference between forbearance, getting somebody to understand what the terms are, can be very valuable, so you don't get involved in a situation where you're stuck. And those were the main points I really wanted to make, and just make sure everybody understood that.
100%. Lee, we're coming towards the end. I mean, if anybody has any questions, raise your hand or shoot something up. We got about 2-3 minutes. Trying to really keep the show to a half hour, because I feel like people start to lose attention span. I know I got a million things going on, and you're a busy guy too, Lee. So you got to take care of your wife, your 35-year-old wife. Mazel tov, Lee. You almost lost me there for a second.
I'm here.
I hit the wrong button.
That's okay.
But I guess if nobody has any questions, then I guess we'll close it out tonight. Look, if anybody wants to get a hold of Lee, go ahead, Lee. We're going to say.
No, I just was going to say this was great. I really enjoyed this tonight. It was a good give and take.
If anybody wants to get a hold of Lee, go onto his website. It's NewJerseyBankruptcy.com. You call his office direct, 856-751-4224. It's 856-751-4224. Again, his website is NewJerseyBankruptcy.com. And obviously, you can always get a hold of me. You guys know how to get a hold of me. RealEstateRecoveryGroup.com. But listen, Lee, like always, I mean, I love having you on and the reason why I picked you as a co-host for this season was because we're headed into some really rough waters, and I think that my book coming out, I think, is going to be very helpful for people because it's how I became who I am as a short sale savage. It's really a huge help for people that are going through the prospect of a short sale, the people that want to buy a short sale, the agents that want to list a short sale. And there's a section in there that basically says like what real estate agents are doing wrong. And if those are the agents that approach you, run. And there's a chapter dedicated to untold stories of people that essentially have gone through bad times. And then I have the resource center. So
love it. That's gonna be great.
And then the education site hopefully is going to launch. We're looking to do a soft launch actually in the next week or two. So I'm pretty excited about that.
That's fantastic.
And I think that site is going to be able to really push people in a direction. I mean, the information that you provided as a vendor that's in that site is going to be like time capsule forever. And a lot of the people that stepped up that wanted to be vendors to be a part of it and have it virtual, as I'm calling it, education on demand. It's better than just doing like a seminar because people can pull it up whenever they want.
Yeah, and we did it targeted topics, which is great.
Yeah, absolutely. You gave me a lot of input. You gave me a lot of insight. So a lot of great people that actually helped me and encouraged me to do it and get online and to build it out. And this is a site that we built from scratch. So I'm not going to lie, it's a pain in the ass to do it, but I think it's going to make a difference.
Absolutely.
And every Wednesday night we're going to be on here. I think honestly, Lee, I think we're actually packed for the net through June.
Okay.
With guests that are going to come on. So I'm excited. And I think my marketing team is actually going to be putting some stuff together, putting out there, like, so people can know ahead of time and like, hey, this week I'm going to watch because so-and-so is going to be on. So
love it.
Got some heavy hitters coming on. So Lee, I appreciate always you taking time out, what is this? How do you think this will affect real estate? All right, so I don't know who this person is, but they said, good stuff, guys. Thanks for the information. How do we think this information is going to affect real estate in the next couple of months? I'll go first. I think it's going to affect real estate, whereas, if the interest rates start to keep climbing up, you're going to get a lot of people that are going to get discouraged. They're going to back away from applications for mortgages. I'm seeing people that wanted to buy property or actually pulling back because they're tired of going into these bidding wars. And I know a lot of people are trying to put on the contract subject to the appraised value of the property. But people are like, nah, no, next. Okay, they'll take it as is and, waive the appraisal. It's nuts. So,
I would agree.
Lee,
I would agree.
In my opinion, Lee, it has the smell and the essence of 2005. And I think that in 2 years from now, maybe sooner, but I'm saying about 16, 18 months, I think things are going to really start to like pressure cook and start to change. And it's sad.
We talked about all the factors, so stay tuned.
Yeah, absolutely. Anything you want to say in closing?
No, just really enjoyed tonight. I appreciate it.
Absolutely. Guys, stay tuned. You don't go anywhere. Stay tuned, guys.